Hi, welcome back again. Okay, so I'm sure you must have seen the introduction to this course, and I'm sure you are eager to learn, and I'm also eager to impact knowledge. As we've said, we're setting up a community, so you see this as a medium to join our community, and then we trade together, we learn together, we get better together. It's just that I have, and we and my partner have been in the game a bit, so we'll just guide you or lead you through. But you see that we'll almost always do the same things and get better together. Okay, so let's go to what we have. For this video, we'll be starting from the foundation of the foreign exchange. I believe in understanding the foundation, which will help your knowledge throughout your career in this line, or as the case may be. So this is the foreign exchange market. Let me just say this: it is not a get rich quick scheme. The truth is, you can become very, very, very rich, no doubt, but I don't want you to see it as a get rich quick scheme such that you will become angry with the outcome if you don't have that as fast as it may be, or as fast as you want it to be. The thing is, look at the end game, look at the long-term plan, and then strive to get there. So the foreign exchange market is what we call Forex basically, and we trade currencies. So we have indices now. We have another different market called stock market. We also have the cryptocurrency. We have synthetic indices. I don't trade that anymore, and I'll tell you my reasons as we go through the course. So whatever market or whichever market you want to trade or be involved in, the knowledge would share in this course should help you through. Okay, so as I said, is the foreign exchange market. Yeah, the players in the foreign exchange markets, from the book I gave you, that was given intentionally so you can read through. We have the institutions, that's big banks. We have hedge funds. We have companies like you have Coca-Cola and some other companies, and all they do is, it's not like they trade actively, but Coca-Cola, for instance, is an international company, and they have to pay their salaries, so they have to buy and sell different currencies at different points in time. So once you do that, you are already involved in the foreign exchange market. Now let me help you. For instance, you're a Nigerian, you're traveling to South Africa. The moment you exchange the NGN, that's the Nigerian naira, for the South African currency, I don't know what that is, or probably let me use the US dollar, that's very common, that at that point in time you are actively, or you just done what we call the foreign exchange. So you just exchange a currency for another. So how we make money is that we look at the right time to sell, or look at the right time to buy a particular currency. It's that simple, but not simple. Okay, so the players in the market. Now, there's one thing I want you to focus on. Yes, we have big boys in the market, but the truth is, they don't call themselves, for instance, and say, oh, please guys, let's do this, let's move the market this way. So there's an algorithm which we'll study much more when we get to the technical analysis. Now we also have the Forex chart. Now this is a platform, TradingView. I'm going to post my link, so you could sign up through my link or sign up on your own, but you can just help me and I'll get credits for having you sign up to my link. So TradingView is basically for chart analysis, and we'll do that more. So we have this here. Let me just go through. Let me see what I have. I have the outline here already. Okay, so yes, I remember having this. So we have banks, we have the central banks. So your central bank, they regulate the price of your currency, they trade. You have companies also, as I said, Coca-Cola. You have hedge funds, people that are quite very, very much wealthy. And then you have retail traders, which is where we fall into. But we are going to learn how to think like the first four. So see yourself here, but your mentality should be like the first four guys. Okay, So let's go to the types of charts that we have. Now, the Forex chart is a chart that shows us how it's a chart that shows us what the market is doing per time, and that is what you need. Yes, some people will say you need more than that, but my line of thought is that is the only thing you need to be successful in this market. Okay, so we have three types of charts. We have the line chart, we have the bar chart, we have the candlestick chart. So I would let's get into business as fast as we can. Let me drag this below so we can see it. So this is a chart, and this is a line. This is a bar chart. Now there are some things I'm going to be showing in this chart. So this is, let me just drop this. We have the bar chart, we have the candlestick chart, we have the line chart. We have some others, but I wouldn't want you to pay attention to this. So these are the three basic charts we have. And when you install MetaTrader 4, you would see them. So now there are four things you have to take note of as a chart analyst. Let me just type it out. You have to take note of your open price, that is the price at which it's open, your close price. You also need to take note of the high and the low. So that is where we derived this acronym, or as we said, OHLC. So it's open, high, low, and close. Now, so let me just show that here as fast as possible. So now let's take, for example, this is your bar chart. It might not be too clear here. So your price opened here, the start here, it came down a bit. This is your low, it went high, this is the highest point the chart could go, and closed here. Now let me go to the candlestick chart. So candlestick, yes, so let's take a typical candlestick. So this is one now. So this is the candlestick. Let me just denote from this point to this point. So what do we have? We have a candlestick. Yes, we have a candlestick that opened here. Now, so the price opened at this point. So this is at 1.19948. Opened here. This was the lowest the price could go. This is a daily chart. I will explain this in a minute. So this is the lowest the price could go. That means the price went as low as 1.19433 that same day, and then the price went as high. Let me take this off. The price went as high as this 1.20488, and the price eventually closed here. So let me just show this here. So I'll use different colors. So the red will be for, let's use this for, the green is for the high, the red is for where the price closed, this is for the open. I'll put yellow there, and then this, let me use black here, is the lowest point. So you have all this. So if I were to do the OHLC, I will just do this here. Let me just clone this 4 times. Okay, so we have L here, we have H here, and then we have C. Okay, so you have it's opened here, then this was the highest point it could go, this was the lowest point. So this is the low of this candle, and this was where the price closed. So one thing is your high and low is always constant. This is an upward move. Let's take a downward move, which is signified by this black candle. So what does this show us? It shows us that the price opened here, then this is the highest point the candle could go to. This is the lowest point it came, and then it closed at this point. So yes, understand this might not be too clear now, but in the next video we'll discuss more about this. So what have we done? In conclusion, we've seen the types of charts that we have. I'm taking this a bit fast because I believe you must have read that book. So we have the line chart, the bar chart, the candlestick charts. We've spoken about the players in the Forex market. We've seen what the Forex market is, and then we've seen the OHLC. Now, let me just speak about the shadow. The shadow just means anything that is not part of the body. So the body will be this. So these wicks, the wicks are the lines we have here, the lines. So we call them shadows. And so we're going to talk about different time frames and the component of a currency pair in the next video. Thank you.